when I first started trading, I used to think for the price of something or a security to reverse, it has to first hit the all-time highs or all-time lows in order for it to make a reversal. And this used to make me wait for several days, several weeks, several months, and even end up missing up on the trade. Or maybe by the time the price is hitting those levels, I'm no longer interested in it. So if you're in the same situation and you're a trader, you can just tell me in the comment section if you're facing the same scenario. So hello everyone, this is Paul from the Pin Academy. And in today's video, we're going to be speaking about reversals. Now, what are we going to be covering in this video? We're going to be covering what we're going to define what reversal is, because I've just told you that I used to face a certain difficulty. Maybe most of you are in the same boat and you don't understand exactly what a reversal is. Then also we're going to be looking at what do you have to look out for to determine that a reversal is almost happening, or it has happened and you need to get in and continue with how the price is moving or the direction in which the price is moving. Then thirdly, we are going to be looking at the best time frames in which you can spot reversals, because most people are spotting reversals in the wrong time frames, which prompts them to either miss trades or take trades early, and then they are hitting stop losses, and this keeps their accounts reducing to the extent of even blowing sometimes or getting frustrated, yet you're not very, very far from the right track, right? So before we can jump into the video, sorry, do you see that red button just below this video? Yes, that one you're looking at, done with the word subscribe. In case you've not subscribed, just click on that red button. Yes, that one, click on it. Yes. Okay, now we can continue. Let's start with what is reversal in trading, right? Now, reversal is simply when the price of an asset or a currency pair, it can be cryptocurrency, it can be whatever asset or security you're trading, it can be commodities, when it changes the price, when it changes this direction from its original movement. Let's say if the price was moving down, right, and then it changes direction to start moving up. Are we together? Originally it was moving down. This was the original direction or its movement, and then it changes to start moving up. This is what we are calling a reversal. Now we want to be interested in picking this trade from down here, or even when it has just changed from around here, when it has just changed and is starting to take the new direction, right? So that's what we're going to be looking at in this video, because most of us are struggling with that. I also struggled with it, and it really took me time to realize the best ways or the best approaches in which I can always catch up with these reversals, or to catch the trade when it has just reversed and it's in the best position for me to take the trade, right? So that's simply the definition of reversal in trading. When a price of a security or an asset is changing direction from its prior movement. If it was moving up, it's changing direction from up to down. If it was moving down, it's changing direction from down to up, right? So then let's look at what do you look at, or what are you interested in to happen before you can start determining that a reversal is almost happening or a reversal has happened. We're going to look at some aspects. The first one is you have to first do a top-down analysis. Now I'm going to explain this on the charts better for you to understand, but in a layman's language, what is a top-down analysis? A top-down analysis is simply you're trying to identify areas whereby you think the price could come to, or the price could go to, or you're identifying your area of interest. You cannot ever know that the price is going to maybe stop here or there, but you can actually mark the areas where you expect price to come to. Remember, we do not predict in trading, but we just mark our levels and then we react to what price will do on those levels. And someone is going to be asking him or herself that, how do I know that the price is going to react here? Remember, I've been mentioning in our previous videos what we call turning points. Now, these turning points are very, very important. Now, turning points tell us that at this point here, sell has reacted. At this point here, sell has reacted. A turning point is clear, is simply trying to tell us that when price was going up, it met an area that had sellers, and sellers pushed it down. Meaning that if price comes back to this area has sellers, there are higher chances sellers could again push price down. Or if, let's say, sellers were here and price broke above, it means that now buyers have broken above this wall, but there's a wall built here. So meaning that if price comes back here, there are higher chances that buyers will again bounce off and continue up. right? So we're in a top-down analysis, we're trying to identify such areas which give us an area of interest or an area of entry, depending on the time frame you're in. Now, let's go into depth with this top-down analysis. Top-down analysis, simply, you're doing analysis in several time frames. For example, I told you guys that you need to get 3 time frames. 3 time frames. Why? You need to get a time frame that gives you the direction, right? You need to get a time frame that gives you the structure that you're going to trade. By structure, meaning either W's, the shapes, or patterns, those patterns that are giving you the trade. For example, you cannot just say, I'm going to sell without a reason. Now, the structure is giving you the reason. Why am I selling? Right? Not the entry. It's giving you the foundation. If you say that you're looking for a sale, what is the foundation on top of that? For example, if I say I'm going to construct a house and I want my house to be a flat, 3-story house or 2 or 4, meaning my foundation must be able to hold that building. Do you guys get what I'm trying to say? You cannot say that you want to build a flat with 8 floors and your foundation is for holding 3 floors. It will collapse. So you have to first get direction. If the trade is going up, yes. If the direction is telling that you're supposed to be looking for upward movements, you should look for a structure that is giving you upward movements. Your direction cannot be giving you to go down, and you're looking for structures that are giving you to go up. Are you getting it? That's why we're calling it a top-down analysis. You first get direction and structure, and then you can come to entry. I'm not going to mention the 4th one. It's not a big one, but the 4th one is also there whereby you're supposed to be refining the entries, right? So these are the 3 major timeframes that you need to have. For example, personally, I use monthly, right? And then after monthly, I come to weekly, and then I take my entries in H4. These are the 3 timeframes that I do use. I'm not saying you should use them, but I'm just trying to give you an example of how you should do top-down analysis. Monthly is for my direction, weekly for my structure, H4 for my entry, and I refine in H1, right? This is how you're supposed to pick out timeframes. We shall have a whole video about this topic because it's one of the reasons why traders lose a lot of money. Then the second thing we have already spoken about it is shapes and patterns. After identifying direction, you need to get shapes and patterns that you're going to trade, because these ones tell us that you're going to either buy or to sell. Now, remember we've said the top-down analysis is giving us the areas we are marking. For example, if I've marked this is my resistance and this is my support, and let's say price is moving upwards, and then I expect price to reverse from this point here, right? So when price reaches here, I've already I've done my top-down analysis. So I expect, not that it's a must, price should reverse. So when price reaches this area of interest, at this moment, this is area of interest. So when price reaches here, I'm going to be looking for shapes and patterns. I'm going to be looking for either an M. I'm going to be looking for a rising wedge if I use patterns. I'm going to be looking for head and shoulders. Those are the things I'm looking at. So these are the second things you're supposed to be looking out for after doing a top-down analysis. Now, someone is going to be asking that about the statement I made when we're starting the video. Now, someone is going to be wondering that if this is the all-time high, let me just mark it here. If this is the all-time high and this is the all-time low, am I going to be waiting for the price to move until it reaches here, then I start looking for reversals to go up? No. Or am I going to be waiting for the price? Am I going to be waiting for the price to move if it's going up until it reaches the all-time high? Then I start looking for sales? No. Now, this is what you're going to be doing. For example, in the time frame where you determine direction, the same things happen. There are also W's, there are impulsive moves, there are higher highs and higher lows, there are lower lows and lower highs. Now, your work as a trader is just simply to identify the turning points. I always emphasize this in almost every video that we have uploaded in our channel. Turning points are very, very important. For example, let me just clear this. For example, to avoid that aspect that I used to face, and I'm sure most of you are facing the same thing, you're waiting for all-time highs, all-time lows, which may not come as soon as we expect, right? So if the market has created, let's say, a W, in the time frame whereby you're looking for direction, in the time frame whereby you're looking for structure, you're going to mark the turning point. For example, this is a neckline. You're going to mark it, right? Now, some people trade when the market is here, and some people want to take the sell when the market is here. Today, we're speaking about reversal. So after the end, by the end of this video, you're going to be able to determine whether you want to trade from up here or you want to wait for the price to reach here, and then you can continue with it up. Now, let's just go back. Let's assume I want to trade the market when it is up here and I want to come down with it. And what am I going to do? I'm going to mark this neckline and I'm going to be looking for the reversal, shapes, and patterns. Remember, we have first done a top-down analysis. Let's say we have identified our direction, where we know that we're coming down, and then the shape or pattern that we identified is this W here. And we know by the rules of a W or by the rules of an M, after the neckline has been broken, we expect what? A retest. So this is what we're expecting. So we have this shape, we have the direction, and we've identified this shape here. So what next am I going to be looking out for? I'm going to be looking for the reversal indications that I'm looking for. Now I'm looking for the same things again. I'm looking for a shape or pattern here, but this time in a different time frame. So I'll go to this is a structure time frame. I've identified my direction. Now this is the structure I've gotten, let's say in weekly. Then I'll go to my entry time frame, which is H4, to start looking for shapes in H4 or patterns in H4 to tell me that a reversal is coming, right? So in this same area here, I'll be looking for those reversals. Maybe I'll also be looking for a change of the shift from higher highs to the market starting to making lower lows and lower highs. In this process is when the market is creating the patterns and the shapes. So I'll be looking for those aspects in my entry time frame. And when they happen, then I can take my trade up to down here. Now, this one does not mean that I have had to wait for the all-time highs or all-time lows. Why? Because this shape can happen in between here. Let me just show you. If this is the all-time high and this is the all-time low, and the market has moved somewhere, maybe it's there, it can create this W here, right? Then you can trade it as it is continuing up. You know that this is the all-time high, so you don't have to wait here, but you've seen a structure that actually you know its rules and you're trading it. So when it comes here, you can continue with it. But also when you're continuing with it, if you're not a swing or a position trader, you're not supposed to trade and hold on to trades, because due to our capital as retail traders, we may not be having the capital muscle to hold, right? So always make sure that you identify the type of trader you are and also know where you are in the market and know the structures you're having. I hope I've made that very clear. So this will help you avoid that I'm waiting for the market to reach the all-time highs, to reach the all-time lows. You may get only 2 trades, or you may actually not get trades, because some of us or some of you have also other things that you're engaged in. Maybe you have businesses, maybe you have jobs, right? That maybe you have school. So to avoid all that, make sure you're following these steps. Do a top-down analysis, mark the turning points, and know where you're targeting. If I identify a structure, you know that this is the point I'm entering from, and this is the point I'm exiting from. Are we together? So now another aspect that you have to look out for is what we call a counter trend line. This one especially comes in the entry timeframes. Remember, we have said that after doing a top-down analysis, you're getting the structure or patterns in the structure and patterns time frame. Remember, we said we have a time frame for direction, structure, and then entry. Now, another aspect you can look out for is a counter trend line. For example, if the market has created for us, let's say, an M, right? And the market is coming to retest here. Remember, we said that when the market has broken down, we want the retest here to be very weak. Otherwise, if it is so aggressive, it could give us a false breakout, retest, and then continues up. And most traders face this issue. Let me just repeat that. Let me just remove actually this. If the market has created an M like this and the neckline has been broken, you know the rules. We have a video on that. In case you've not watched it, make sure you look through our videos and watch the rules of M's and W's, right? We expect the market to come and give us a retest here, but we are saying that this retest should not be aggressive. By aggressive, I mean that if the market broke here by a strong momentum, the same momentum should not be the same way the market is retesting, like maybe very strong up. It will make the price break above this area, retest, higher chances of retesting, and continues up, meaning that the market has faked you, right? To avoid all this, what do you look out for? You want to look for a momentum that the market is retesting and is weaker than this push here. Now, how does a counter trend line come in? A counter trend line comes in when the market is making this weak retest here, right? Guys, please note this down. A counter trend line happens when the market is making retests. Are we together? I'm talking about this, happens when the market is making retests. Why? Why is it a counter trend? Because the market, if it is going up like this, This is where the counter trend lines happen, because the market is creating a mini trend. Are we together? Just like here, when the market breaks down, it retests with this mini trend. In most cases, when the momentum is low, this is a communication that I am not going to continue up, but rather I'm retesting a certain point and then I continue where I was going. The same thing, the trend here will be weak, right? So you can mark a trend, that you can draw a trend line here. Even here, you can draw a trend line. This is the trend line that you're going to mark, right? By now, you should be knowing how to draw trend lines if you've been following our channel, because we have a whole video on how to properly draw trend lines. Most of you are drawing trend lines wrongly. Then you say that trend lines don't work. Please watch that video so that you know how to draw them properly. So I hope you guys have understood what a counter trend line is. So even this can communicate to us that a reversal is coming. So when the market breaks this counter trend line, you know that the market is no longer continuing with this counter trend line, with this mini trend here, rather, it is reversing to continue down. Are we together? I hope that makes sense. So that's another aspect that you look out for when you're identifying reversals. Another one, which is very unpopular to us, most price action traders, but you can bring it in just to give you an edge in the market, right? As a confluence, just remember, trading is all about having the most confluences. When you're taking a trade with many confluences, let's say in the same area you have, let's say, support, and in the same area you have a fib, in the same area you have a moving average, it gives a very solid reason to take the trade. So a moving average, what I've written here as MA, especially for us in the video I've told you about, is the EMA. It's what we use sometimes in case we want to use get a confluence. All right, we use the EMA 200 or EMA 50. You can choose any that you want. So how does this one give us a reversal? We have made the video on it, but I'll just give a hint about it here. If this is your EMA 200, let's say this is the 200 EMA, right? You can use it in a bigger time frame and also in a smaller time frame, entry time frame. Now, just in a few seconds, I'm going to show you the time frame which is best for reversals, right? So if this is, let's say, your moving average in daily, let's say weekly, for example, I get my structure in weekly, and the price is down here. This is the price here moving down. It means that this moving average is acting as a resistance, right? But if price is up here, it will mean that it will be acting as support. Let me just repeat that. The position of a moving average, if my moving average is this one here, this is the moving average, and my price is up here, this is price up here, right? Here. It means that this is support. But if price is down here, it means that this is resistance. Are we together? So it means that when price comes to this moving average, I'm looking for structure, the same structures that we have spoken about, the shapes, the counter trend lines, we're looking for it here. Guys, do not trade moving averages in the way you people have been doing it, crossovers, blah, 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 those things. Please use moving averages in conjunction with price action. You will not go wrong, or you'll be right most times than you go wrong. Please backtest it. We have made a whole video about it, right? It's exactly what we use. We're not posting anything on our channel for views. We're posting exactly what we use, what we have backtested, what we have used on the live account. Are we together? So it will be acting as support or resistance depending on where price is. Now, how does it help us in change of trend? Let's say when we shift to our entry time frames, let's say like H4, and this is the moving average here. Now, when price is above it, let's say I have a W and I'm expecting to sell. I will not sell until this price breaks below the moving average. Now, when it breaks below the moving average, remember we're looking to sell. And the moving average is acting as support if this is price. If price is still above the moving average, I don't want to take a sell when price is above the moving average because I'm looking for a sell. Now, I'll be selling at support. Are you getting it? So what do I want to do? I want to wait for price to break the moving average, meaning it has broken support. Now, this support has become resistance. Remember, we want to sell at resistance. So when it becomes resistance, then I can wait for a small pullback and then I can take my trade. The same applies when the moving average, let's say, is above. Let's say, and this is price. If price is below the moving average, what will I be wanting to do? I'll be waiting for the price to break above if I take a buy, right? I'll be in my entry time frame, guys. I'll be waiting for price to break above. Then on the retest, I can take my trade. This is how we use the moving average to identify reversals. right? So let's just briefly go through what you have to look out for before you do it. You look out for a reversal. One, do a top-down analysis to mark your areas of interest or areas of entry, right? And I've told you to pick timeframes from 3 timeframes. Personally, I use monthly, weekly, and H4. And then after that, look for shapes. Now, these shapes and patterns depend. In your structure time frame, these shapes and patterns are giving the structure to trade, to mark your areas of interest, which you're targeting, that price is going to come here. Supposed to, most likely, not as a must, but most likely it's going to come and turn from here and here, right? Then I've talked about counter trend line, which is best used especially when the market is making retests. I've explained that. Then I've also talked about moving averages. And moving average and counter trend line is best work in your entry timeframes. Also, the shapes, I've told you that you can use them in 2 ways: to get the structure to trade, and also when you're in your entry timeframe, to look for trades, right? So now, what's the best time frame? What's the best time frame that you can actually use to spot reversals? Now, you can spot a reversal in a bigger time frame, but we don't trade in big time frames. So the reversals are best spotted in our entry time frames, and our entry time frames that we do advise as APN Academy is H4 and H1. Most of you can go to minute time frames, but the best time frames, that whether you're an intraday or a swinger, because swingers do use H4 and intraday do use H1. Now, the other timeframes that people use, we call them refining timeframes. The entry timeframe is H1 for an intraday, but you can use small timeframes to do your refining. Now, most of you are using refining timeframes to take trades. That's why in most cases you quote offside. That's why 95% of traders are losing money, right? Because they do not understand the different uses of timeframes. Yet we have explained extensively in a video of more than 20 minutes, explaining the importances and uses of different timeframes, right? So these are the times in which you spot reversals. Even the refining timeframes, you can spot reversals, but you cannot start spotting reversals from a smaller time frame without knowing what is happening in the time frame ahead of it. So make sure you do not blunder like that. Now, all this is theory. I would like us to go to the chart so that I can show you these things practically. Okay, so I would like us to use gold as our example, and we're going to do a very comprehensive analysis on gold. We're going to start with top-down analysis, then we implement all the rules that we have said that will give us reversals, right? Now, remember we said that you should avoid saying that when we reach all-time highs, and then you can sell, or you don't have to wait for it to reach the all-time lows, right? This is the first thing I would like you guys to remove from your head. Now, here we have an advantage that this is the all-time high that we are seeing in front of us here. It's the all-time high at this moment. So we are lucky that the market came and rejected from this point here. So that's an advantage to us. But now, in case you missed this all-time high, are you going to wait for the market up to down here? How long are you going to wait? Will it reach there? It may not reach there, right? So that's the first thing you should avoid. Then secondly, we're going to be doing top-down analysis, then we mark the levels that we're interested in. So now, starting from monthly, what we observe that the market has hit a double top here, right? Now, when the market hits this equal highs here, that's a communication to us, plus this rejection is a communication to us that there are higher chances that we are going to go down, right? But now there's a threat that we do have. And what threat is that? The threat that we do have is this point here. We are not going to be thinking about selling gold unless this level here is broken, this turning point here. When this turning point is broken, we know that our next threat is this turning point here. So it's exactly what we are going to be following. So you need to exercise patience when you're trading, right? So our first indication has been given to us, but we're still not going to be interested in thinking about selling gold unless this area here is broken. So I'm just going to mark it, and then I'm going to forward play. We're only selling gold here unless this point is broken. So it's when we're going to be interested in selling gold. And our target will be, let me just mark, our target will be this one here, right? Step by step so that you don't get lost, right? We're only going to get interested when we break below that level. Okay. Let's go slowly. So this is the first time it broke down here. Now, what am I going to do when it breaks down here? I know that now I'm looking for sales. It has given me the direction. This is when I get my direction, right? I get my direction when it breaks below here. Then on the retest, I won't take sales up to here, but still I won't take sales because monthly has broken below level. What do I have to look for? I have to look for a structure in weekly. So I will drop down to weekly, and I need to have a structure in weekly. Now in weekly, what do I observe? In weekly, I have an M. I have this M here, right? And we have broken a neckline. And we know that after breaking a neckline, what we expect, we want a retracement, and then we can take our sales up to this point here. Are you seeing how we do top-down analysis? So we are going to, this is our M, we're just going to wait for a small retracement, then we take our trade down. Now, what are we going to do? We are going to just forward plan, and when the market comes back into this area, that's when we go to our entry time frame to observe all the aspects that we have looked for. Right now, we have seen an M in a bigger time frame. Also, we're going to go down and look out for a counter trend line. We're going to look out for M's. We're going to look out for patterns in the lower time frame where we take our entry from. But so far, we have gotten the direction that we need to go down. Then secondly, we have gotten a structure in a bigger time frame that we need to go down. Are we together? So now we're just going forward play. When the market touches this area here is when we're going to our entry time. Let's drop down to our entry time frame, which is H4. Remember, I told you I use monthly. I use monthly, I use weekly, and I use H4 for my entry. So we're going to use H4 today. Most of the videos I've been using daily and H1 because it has been intraday, but today it's a swing trade, right? Because I'm a swing trader, I just want to show you how I normally do it, how I do my top-down analysis and how I take my trades. So H4, I want the market to come back into this area, and then I can be able to take my trade, right? So the market came back into this area here, right? But still, when it comes back here, most people after this rejection are going to take the trade. But I do not have yet a convincing factor to show me that the market is coming back like it has confirmed the sale, because it can just make a pullback and continues up, right? So structure to be given to me, then I can be able to say that I'm trading. Now, what do we have? Now we have a double top here. After the market giving me this double top, what do I want? I want the market to come back to the neckline here. Then I can be able to take my trade. So let's see if the market comes back. The market came back and it was rejected. So this is the first point whereby we're going to take our sales here and our stop loss just above this area here. And also, remember our target is down here because we are swinging. It's down here. Let me just put it here. Our stop loss will just be above this area. Remember, minimum 1, 2, 3. So let's play and we see if we hit target or we hit stop loss, right? Then also, you can clearly see that when the market was breaking down here, let me just show you. On the retest, the market gave us a double top, which is an M. Remember, we said we need the market to give us shapes, right? Both in the bigger time frame shape or structure, the M's, W's, and head and shoulders that we're getting from the structure time frames, that is weekly in this case of ours, because we got direction from monthly, weekly the structure. Now weekly we got an M, but that is for structure, giving us the parameters in which we are trading, and also the strength, the foundation. Then the shape that you're getting in the entry time frame is giving you actually a go ahead to take the trade. For example, in this case, we have a double top and it's giving us a go ahead to take the trade. We have a double top and multiple rejections. We have talked about candles and how we can use them. Then also someone who uses trend lines. Let me just clear this. Someone who uses trend lines, you have a counter trend line here. You have a mini trend. Look at the momentum of this trade. If we have just one long seller, but look at how many buyers are here. This means that there's not enough buyer to push out this seller here. So meaning that the seller is still more powerful in the market. And then alternatively, you can also have a counter trend line here. Now, when the market breaks through it, this is also another confluence that you can have, right? Now, when you go to a smaller time frame, like to a more smaller time frame like H1, you'll actually see that we had a trend here, a trend line. Are you seeing this? You can just adjust it in case you want to use H1. You can clearly see this is a trend line. Are you seeing this? So this is what we mean by a counter trend. We have the general trend that we want to continue with, but also we have a mini trend, which we explained in theory. I hope we are following. So now let's just go back to H4 and then we can play forward and then we see if we shall hit target. Always make sure your stop loss is above a structure that can protect you, right? Now, for example, here our stop loss is just above this structure here. If the market goes beyond here, we can even be, you won't be so hurt that you lost a trade, but losing a trade carelessly is so hurting, right? So now, these are our parameters that we have set. We have set our stop loss properly and our take profit. So let's play and we see if we shall hit stop loss or now here you can see why we put our stop loss above this structure here. The price came and almost took us out because it's doing what we call stop loss hunting, right? But you're well protected by this counter trend line if you extend it. Are you seeing? If you extend this counter trend line, it's protecting you. And also we have a structure here. This one here, we have a presence of buyers here, which was holding us. That's why we put our stop loss above. And you can clearly see the market triggered everyone who had put stop loss above here and took them out of the market and then dropped down, right? Again, it's coming back to do more stop loss hunt. But remember, our target is down here and we are going to hold, since we are swingers, and swingers, we use proper risk management. We use small lot sizes to make bigger returns because our targets are normally big, right? So let's continue playing and we see if we hit stop loss or take profit. So for this trade, we did hit our take profit here. This was when we hit take profit, a decent 1, 2, 3 example. Now, when we go back to weekly, let's go back to weekly and observe what other structures been created for us to be able to trade. Now, if we observe, we again have an impulse. We had this M that we have just traded, and also we have another impulsive move. So after an impulsive move, we have studied about Fibonacci retracement tool. You can draw your fib, and then you mark your fib levels, right? So in this case, I'm again going to mark my fib level, which is 38. I'm going to mark 50, and I'm going to mark 60, right? So we're again going to wait for the market. If you want, you could have traded this reversal upwards. Actually, let's trade it. Let's just say take the market backwards. And then we want to trade the market back to that Fibonacci retracement level, right? So let me just remove this. Now we go to our entry time frame. We already have the direction that after an M and an impulse, we need to go back upwards. Now, what do we want next? We want to get our entry, which our entry we're going to get from H4. So let's go to H4 and look for change of trend. Now, change of trend, remember what we're looking for a shape, we're looking for a counter trend, we're looking for a trend line to be broken or a counter trend line, right? So in this case, I have a trend line just here. There's a trend line that I do have here, like this, right? You can have this trend line like this, or you can start drawing it from up here. And also now what's the next thing that we want the price to communicate to us that we are no longer interested in going down, but want to go up. So let's play until that point where the market gives us at least a communication that it's no longer interested in going down. Still, the market is pushing down, so we're not yet interested in it. We're not interested in it. We're not interested. Now, this is the first time the market communicated to us that, hey, there's a possibility of the market not continuing down by creating this double bottom, the first bottom, the second bottom, and then created this W here. Now, after W, the same principles happen, but just here, this W is in an entry time frame, so you're going to use it to take your trade. So our entry is going to be when the market comes back here, right? And our target will be this first Fibonacci retracement level. So let's play it, and then we see when the market comes there. Here, now this is when we're taking our entry because it's when the market first hit that neckline, right? It has communicated to us we're not interested and broke above this trend line of ours. Are you seeing this trend line here? These are all communicating to us that there's a possibility of a reversal. We don't know if it is going to hold, but the rules are there. The rules we talked about, trend line or counter trend line. And then also we have double bottoms, the same shapes we talked about. And then we did the top-down analysis. And also we got a structure. We have an M and an impulse in weekly. And then after an impulse, we know that we're supposed to be going back to retest the Fibonacci retracement levels, right? So I'm just going to set my stop loss below this structure here. There's a structure here, the presence of sellers. So we expect this sellers not, the market not to take us out at least. If it takes us out, it's okay, right? We already have a 1, 2, 3 that we won here, so we have the balance, right, to trade comfortably. Now let's play and we see if we shall win. Also, we won this trade, right? We won this trade here like this. Now, I want you guys to be keen with how we are placing our trend lines, how we are taking our trades. We are taking our trades after the market changing trend. Are we together? We do not just take a trade because we have seen a tweezer bottom, we have seen a rejection. That's how most of you are trading, and that's why you're losing money and you're not consistent. Are we together? So now let's go back again to our structure time frame where we get the structure to trade, which is weekly, right? You can trade one pair in case you master and you understand exactly what you're looking out for in the market. Now, when the price comes back here, what are we looking for again? We have an M plus, an impasse, and when we tested the Fibonacci retracement level, what are we looking for? We don't know if the market is going to stop on this Fib level, or this one or this one. So we want a seller to come into the market, and then we can start looking again for sales, because we know after an impulse retracement, we expect another impulse downwards. So let's play and we see exactly that point where the market gets sellers, right? Exactly at this point is when we're going to go to our entry time frame again, and then we look for sales, because we know a presence of sellers come into the market. So now what we're left with is just to wait for the market to give us an entry, right? Now at this point, the market has not given us an entry, but it has given us a structure that we can trade. Are we together? So the market has given us, where is the structure? The structure is here. We have this head and shoulder here. Alternatively, someone can say we have this big M here, right? So what are we waiting for? We're waiting for the market to give us at least a retracement back to this neckline area here, and then we can have to take our trade. Now, where are we going to place our stop loss? You can place your stop loss above this shoulder here, but I prefer putting, if you're using the Fibonacci retracement level, I usually prefer, because this is a structure we've gotten in weekly, I usually prefer you putting your stop loss above the next Fibonacci retracement level, so that you have this structure protecting you. You have also this Fib protecting you, and also this next one protecting you, depending on where your target is now. For example, let's just go back to weekly. When you go back to weekly, you will notice that where is our next possible target that could hold this price. The first one is this one here, right? The first one is this one. I'll just mark it. The first one is this low here, right? And then the second one is this one here. But of course, we expect at least the market to give us 75% of this move, or the same distance of this movement here downwards. So there are higher chances this market could actually also break this and make a low, right? So when you're measuring, make sure your stop loss is at least a third of your target, or your target is 3 times your stop loss. So when you go back to your entry time frame, let's observe if we shall get a 1 to 3, depending on where we set our stop loss, right? So assuming I take my trade from here and my stop loss is up here, and this is my first target, do I get a 1 to 3? No, I do not get a 1 to 3. Are you getting it? So how about if I put my stop loss here? Do I get a 1 to 3? No, I do not get it. So let's just adjust our target, and we say that we are going to hold it up to this lower target here. And then I will just adjust my stop loss here to get at least a 1 to 3. So we are going to play, and then we see if we shall hit our target. Okay. So the market filled us in here, went, came and retested here, this neckline that was broken. So let's see how it plays out. So in this case, we hit stop loss, right? We hit stop loss on this first trade. Are we together? We hit stop loss on this first trade. So this is a stop loss that was hit. Now we have 2 wins and 1 stop loss. Are we together? So now again, the market gives us another opportunity to take this trade. Where is the opportunity? When the market broke this structure here. So we want the market to come back to it. When the market comes back to it, we're again going to take our trade. Do not panic, because your big time structure, the structure that you got in weekly is still indicating that we are going downwards, right? The big time frame structure is still bearish. So you can still look for another trade as long as it fulfills your entry rules. Now, in this case, we have broken down. We need to come back and retest. The moment it comes back, we take again the trade. Are we together? So let's wait for the market to come back, right? It almost came there, but didn't reach. Will it come back there? If it doesn't come back, we have no trade. So the market came back here. I think here. So we are going to take our trade here. We're going to take our trade, went again, breaks back below this area here. Here, this is the first time it broke back below. Not yet, it's still above. So this is the time it broke back below. This is going to be our entry here. And our target is still going to be this one here. And actually, this time the target will be lower here. Let's just go with the lower target. The lower target. and our stop loss is just going to be above here. We want a 1 to 3. So let's again play. If it hits us out, then we can not go again in, because you don't have to have many losses in a day so that you can wipe out the profits that you've made, right? So let's play and see if we win this one actually. If we lose it, then we call it a day, right? You don't have to force trades. So the trade took us into drawdown, and again, we came back in profit. So let's see if we shall hit the target or hit stop loss, right? So we won this one here, right? We won this one. So let's first look at our history and observe exactly if you're following the rules that we talked about, because we have tried to look at both sides, buying and selling, right? We first started with this sell here. We went for this buy, then we hit a stop loss on this sell, and then we won this one. So we have 1, 2, 3, 3 wins and 1 loss. Now let's just try to calculate in case someone is using 1 to 3, right? So we have 1 loss, which is 1 times 1 is equals to 1% of your account. And then we have 3 wins, which is 3 times 3, right? Which is giving you 9%. So 9% minus 1, you get 8%. It means that even after this loss, you're still 8% of your account upwards, right? So this is how we do trade reversals, and these are the things that we implement. I've tried to show you exactly what we did in theory into detail. I hope you guys are going to practice this and you're going to implement it. So if you found value in this video, make sure you do click the likes button so that also other people can come and watch it and obtain the value that you've gotten, right? And if you've not subscribed and it was your first time watching any of our videos, particularly this one, make sure you click that red button just below this video. Have a great day.